All right, good afternoon, good evening, everybody. It's Trendy John from Simpler Trading. Today is 12th of January 2025. I apologize right off the bat for the delay. We didn't get here until close to 7 o'clock tonight. Then we had to drive a good hour or so to get home. Then we stopped for a little bit of dinner, and here I am. What do I have to say? Well, first, very, very happy to see the market pull back while I was gone. We got to sell some of our SPX puts. Our SPY hedge for March is looking better and better. And this is what I wanted, imbalance in the market. And we're finally seeing that. And there is potential for more downside. And I'll be going over that with you here shortly. But first, we're going to dive into our U.S. economic calendar. And the first thing I'm going to tell you, as I tell you all of the time, we are professional supply and demand traders. Our job is to identify where the bigger money is in the market and align ourselves with that, wait for price to get there, right? Let these catalysts happen. Let fear happen. Let euphoria happen. Let it bring price to our zones, and then we take action. Okay. Some of these things I'm about to show you on this economic calendar for this week are exactly that. They're just catalysts that push prices to supply and demand. Our edge is being able to identify that, and my edge is to be able to show you how to do that so that you could be ready for it when price gets there. So let's start with the Monday, January 13th at 2 o'clock. You guys can see monthly U.S. federal budget. So pretty quiet. My first take on this is when we come off of a very bullish or bearish day. The sentiment, right, was pretty bad. On Friday, there's a lot of fear out in the market, and therefore I think it's an opportunity for the market to continue to create a little bit more fear as there's still room, like I said, for the downside and perhaps some more fear to ignite extreme fear. Okay. Then on Tuesday, it gets a little bit more interesting. You guys can see we have producer price index core PPI year over year. 8:30 first thing, and these are Eastern time. And then moving down here at 10 o'clock, we have Kansas City Fed President Jeffrey Schmidt speaking. All right. And then we have the Fed beige book. And then New York President William delivers opening remarks. Wednesday, Consumer Price Index, CPI year over year, core CPI. And then we get some more Fed heads in here speaking. You guys can see that all the way through the rest of the day. And then on Thursday, initial jobless claims, U.S. retail sales, and then import price index, business inventories, and home builder. And then finishing it off on Friday with housing starts, building permits, industrial production, capacity utilization, and of course, we have earnings lining up for financials this week, which I'm really looking forward to. A couple names in here that I am taking some interest in would be KBH. I just want to, I'm interested in how home sales are going and so forth and what their outlook looks like. And then as we come in on Wednesday, we start to see names familiar with JPM, Citi, BlackRock, Wells Fargo, Goldman Sachs, and then Wednesday after the close, a couple more names in here, not too much of interest for me. Thursday, of course, United Health Group. Can't wait to see that. UNH has taken such a big dump after that tragedy that happened. TSM up here, Bank of America, Morgan Stanley, Bank Corp. And you guys can see the rest of the names. That pretty much sums it up for me, who I'm interested in seeing for this week. The next thing I want to show you is the SPY, the bigger picture. I am looking at TV Trading View. I love using this. And matter of fact, if you are at Simpler or you're interested in coming to Simpler, when you get some of our indicators, you also get access to the indicator on TradingView and Thinkorswim, which is really, really cool. Anyways, January 12th, 2025. These are my notes, really quick and easy. The quarterly candle is inside. The weekly is a double inside and down. The trend that started on November the 4th is now broken. This means that price closed below the 618, also known as the Golden Fibonacci. I expect 572 and 563 to hold this week unless the sentiment really gets that bad. I would expect this to be support until we at least hear from some of the names that I just went over on the earnings calendar. See financials start to report earnings, and again, our two major levels for this week will be 572 and 583. So again, 572 and 583. Let's go ahead and pull up SPY on the Thinkorswim chart, and I just want to show you some Fibonacci's. So what I'm talking about is when we anchor our Fibonacci's from this pivot low here into the pivot high. I want to talk about a couple things. We saw structure right here. It did go inside and down. I told you to be warned since then, and especially after we broke down below the trendy yearly edge. This is where we go double inside and down. We broke below the 618, which is that 583, that major level I'm talking about. And then below that, we have the 88.7, which is 572. Now, my probability suggests 85% probability that we will hit the 88.7 when we close under the 618. Timing is the variable. You'll notice in here, I had the notes last week as well. For a while now, I said this is possible. This area feels like it comes in the first quarter. And that's what's happening. So we're breaking down, we're pulling back into this zone, the imbalance that was created when the election happened. And we do have the inauguration coming in on the 20th. In my eyes, all we're doing is playing, we're getting the playing field set for that. I do believe we get a big move to the upside. I don't think that we make new highs or anything, but the further we get stretched down here, which I would personally love to see something more like this, okay? And then we create a lot of trading range, and then around or after the inauguration, perhaps into the 24th, or we start kicking off around the 24th into the early of February, then we start to see some sort of bounce back, at least up into this level, and then probably back down and sideways for a bit. Right. So again, that's what I'm looking for. Now, in the big event, something bad happens where we get extreme fear, maybe some capitulation. I always like to bring that up just in case. This would be the area down here that I would get super excited about. And that's still some distance down there, but honestly, 580 to 550 is not that far down. It could happen very quickly. It could happen this week. So if that were to happen, I personally would be very happy. Okay. So, anyways, not saying it's going to happen. One thing I do want to take note of here, we did come into an area where we could perhaps see a relief bounce later on tonight. Okay. Probably while you guys are sleeping, or it's happening as we wake up, and we'll look at the charts a little bit closer here shortly. All right, so let's go ahead and move on from the SPY big picture from our weekly fibs, and let's go to the Qs, and we're going to once again look at trading view and just look at the quick notes I have really fast here. Next thing here, 125, same thing, the quarter candle, sorry, 112.25. The quarter candle is inside. We're talking about this current candle right here. The weekly is a double inside and down. The trend is not broken. That started on the 11th, on November the 4th. Like the ES, which I just showed you, the 618 is actually still holding. However, the level 505 will seal the fate of that statement that I just made. So if we break down below that 505, then guess what? We're breaking that overall 618. Okay, and I think we're teetering around it right now as I speak tonight. All right. I would expect 490 and 484 to hold this week, at least until we see financials report. I said the same thing on the ES or the SPY. Wait till financials report, and perhaps they give us the reason to sell off a little bit more, or perhaps they save us. We'll see. Okay. All right, let's go ahead and bring over Thinkorswim. Same thing. We're going to take a look here on the Fibonacci's. All right, guys, you can see right here. Yep. Look, while I'm talking, we're even dropping even more. So here we are at 503. 505 was that level, the 618. So I'll take that statement back and say, guess what? We did break that 618. We are below it. Same thing here. We could see prices now move into 497 by 490. Once again, you know, the probability suggests for our Fibonacci that I teach is if we break below the 61.8, we have an 85% probability that we're going to hit the 88.7. First, we hit the 76.4, and we can get a really big bounce. That goes for the same thing on the SPY, but let me just kind of show you what that looks like when it happens. We break down, things start to look really scary, and we could get this really solid bounce off of this 497 level, but most likely around 505 to 510, it breaks right back down, and then we head back down towards 490. Okay. Now, in a capitulation, extreme fear, you don't get that kind of bounce. We'll just kind of break through all of this and most likely come into the 490, 484 level. Okay. This is what it looks like on a weekly. I didn't show you the daily, but let's just take a look at it really fast. What I'm always looking at is whether or not, we got like a solid flush low on Friday. What I mean by flush low is when the candle is coming down and things are really bearish. Let's say we get a continuation candle like this. What I'd like to see is that this candle here, let's just reenact Friday, right? I would much rather see something come down so far, and then what happens is that it bounces back up, okay? You get something like this, but then you have a wick that's extraordinarily big. I mean, it's like this, right? And these flush lows, they flush a lot of traders out. And then what you'll see into the next week is you'll come down just a little bit. You still scare some traders, but then you round out, and then we get this really big move. I wouldn't consider this a big flush low. You could go back and take a look at, past history when we have big, big drops, and look for those flush lows, kind of like this, where you take out a lot of traders and we continue our journey back to the upside. So this kind of makes me feel like we continue down. This is just a pretty soft landing, if you ask me. The separation between price and the cloud are really not there's not that much divergence there. So it makes me feel like we could create a lot more divergence. And when we look down and to the left, you can see that the 76.4 is supported by a lot of these candles, and that's why we could see a bounce. But we also have a gap fill here around the 88.7, and right here, right around the election, is that imbalance that we created. So the ES futures, the SPY are coming into that imbalance, but we could dig deeper. I'm going to show you here in a few minutes on the ES chart. But here, I still feel like we need to come down into this area before things look really good. Now, I'm gonna just on a few notes. I'm starting to accumulate really, really small with shares and some names that I like. Um, I mean, really slow, guys. We're talking like 25 shares at a time. Now, depending on what kind of stocks we're looking at, that could be $5,000 at a time. But again, from a share count, pretty small trades that I'm taking so far right now. Okay. So, anyways, my plan is long term, just kind of accumulate. I did the same thing last year during this time. And you never know how long you could be accumulating, so you want to be careful and not over accumulate in the beginning just because you think it's going to bounce, because you don't want to end up doing something like this. Here, let me show you. Right, I'm like, oh, 25 shares here or here, and then here, and then here, and then here, and then just keeps going, and then you're sitting down here, and you spend, half the year just trying to get back, your head above water. So very, very slow count for me. I'll continue to trade options to the upside and downside, doesn't matter. We'll just kind of follow the overall trend. But for right now, I would say that your sentiment, you guys need to be cautious. I'm very bullish on buying the dip, but you just need to be, patient in looking at your smaller time frames and making sure we're getting those buy signals when we come into those areas where we could see buyers step in. Okay. Next thing that I want to be taking a look at here is going to be the dollar. The dollar was really, really important. I told you guys that for the last several weeks. I feel like I warned you very well. I told you, that I wanted prices lower. My SPX trade, which was my most expensive trade, was to the downside, and that played out very, very well. And I closed it on Friday, even though it expired here or this coming Friday. Um, I went ahead and closed it Friday. It just felt right. I was in Vegas. We were doing well, and I just didn't want to sit on it in case we continue to dump. It would stink to see such a nice position go to zero, because we had 100-point wide butterfly, which started off pretty expensive, right? But it worked out. So, Anyways, on our next chart, yep, the dollar DXY. All right, so we're going to look at a weekly here. This is the dollar. When the dollar's cruising to the upside, we're looking, to be a little cautious. I will say when Trump's in office, he's not the president yet, right? The inauguration's not happened, but the dollar tends to favor a strong side when Trump's in office. So this is nothing new, but far as supply and demand, I was looking for prices to push up towards this target in here, which is 111. I still believe that we continue to push up that way. And if we do, I think this is where we could see a rejection in the dollar. Therefore, you could see a relief bounce. So I think the dollar needs to push just a little bit more towards 111. I think the futures, the market needs to come in a little bit more towards that 76 and 88.7. And then that will lead us to the possible rejection in the dollar. And then over here in the TNX, the 10-year Treasury, I believe what happens is we push up towards the 88.7 here, which is 4.8, and we could possibly see 5.0, and there we would get a small rejection. So TNX, 10-year Treasury, and the dollar, 111, we start to see those, then I think we could see some sort of relief balance. And then the ES in the Nasdaq or the SPY and the QQQ dropping into those levels that I talked about. Okay. So that sums it up for those. The next thing that I'm going to look at is going to be the skew, which did drop, which is what we want to see to the 151. You know, it's still super high, but remember, in this box, I'm looking to potentially. Look, if the TNX continues to go up and the dollar goes up, I would like to see this skew drop somewhere between these two red lines, and that I believe sets up for our next buy in the market, for our next little rally that we get. I don't think that it's going to be big. I think any kind of rally that we have is what I call a relief rally. And if you don't know what that is, I talk about it on my YouTube page, so please watch that video. Those are very, very important to understand. Because then it's just going to kind of set us up right into financials. We'll have to wait for financials and see what the market wants to do. Okay. All right. So moving on down, we're going to look at the fear and greed index. And you guys can see it's at 27. There's still room to create some more panic in the market. And I think we do that if the dollar and the TNX continue to do what I think they might do. Will cause some more panic. But please, please, guys, everybody understand that opportunity happens at the extreme levels. It's a timing variable. I don't think you have to be perfect. I think you could scale in as long as you're at levels and you understand that this is where most people freak out. This is where most people buy puts. And this is, if you're buying puts on the bottom, this is usually where they get run over. And then the market has some kind of snapback that looks really pretty. Inauguration, who knows? And then all of a sudden, these guys are all eating, chewing on crow because they were drinking the Kool-Aid of a crash, and then the crash doesn't happen. Market's right back up towards the highs again. And, I'm not saying that's going to happen, but shoot, it happens more times than we get crashes in the market. So please, please just note that this means participants are starting to lay heavy on the put side. And a lot of times when they do that, the market's looking to kind of pull the rug or, push the market to the upside. Okay. Anyways, let's move on into my favorite part here, which is going to be the ES futures. So I'm going to come over here, tap on ES25. This one's going to be pretty quick. All right. So we'll go start with a weekly kind of top-down approach. On the weekly, you guys can see here, we're currently down about 29 points. I can see that sentiment is creeping in. This is some of that imbalance we talked about. Now, on some of my charts, if you've been watching over the last couple of weeks, the box would look something like this. So we're in that box, but the extreme portion of the imbalance that started here is actually more down towards this 58.24 into about 57.99. So to me, it makes sense to open up at around 5800, and if we get some more panic selling, we could come to this 57.64. That should create some sort of relief bounce in here that creates a little bit more divergence between this cloud that you can see here. I'll outline it. Imagine if price were to come down to here, okay? Then we create a lot of divergence, and I think we get a nice little snapback rally there, okay? At least into Wednesday when banks start reporting, okay? All right, moving on. I'm gonna come over here. And this is the daily. These are your triggers. These are some of the triggers that we had on for last week. You see that imbalance there. We hit that trigger as of right now. Uh, we're bouncing a little bit. Again, I would go to your smaller time frames and look for signs that, buyers are stepping in. That's using trendy signals, trendy turn signals. Again, an idea if you want to go long tonight and just kind of, you know, scale into this position. For me, I'm not doing anything. I need to hit the sack. It's already 9:50 here, so I'll be going to bed pretty shortly and don't want to be stressed out about anything. But if I were going to take this trade, then I would accumulate in here. I'm just not willing tonight. I feel like since I was gone, um, a day last week, I just need to fill out the market tomorrow morning before I put any future trades on. Um, so I'll probably wait until tomorrow when I open up live with you guys to put on a trade and see if that's what I want to do. Okay. Anyways, these are our levels. You guys know how to do this. If we hit the resistance level, I would expect a rejection there. If we hit the short trigger, I would expect a rejection there as well. Again, using your short time frame signals. Okay. All right, over here on the 4 hour, we broke below a zone. Finally, that zone kept working. You can't see it here, but it was in this area. It worked really, really well over and over. And then Friday, we finally closed under it. So we have two new zones here where we could find buyers. They're pretty much stacked up right around the same areas that I just showed you on your last chart. Our next chart that we're going to is going to be the NQH25. And when you look over here at the weekly, and all right, this is what it looks like. So we're 3 weeks down. You guys know that I like to look at my cycles and 2 to 3. So anytime we have 2 to 3, I'm looking for some sort of relief bounce. I showed you before why we could be seeing a relief bounce. And this 3 weeks down says the same thing. I don't like that we're stuck, below the 38.2, but above the 50. We're kind of in no man's land, if you will. It looks better. One thing I'll note here is that we are underneath the bullish channel now. So therefore, my overall sentiment is neutral. And then we're not underneath the 50. We did not break the 618 of the trend that started back here that I'm measuring. So right now, just a very big, nice neutral. Another note I kept saying over and over, if we got above here, it looks great, but this was the yearly trendy edge. And listen, I've been studying this stuff for many, many years, and I'm telling you, as long as we're under here, your overall sentiment is sideways to down until we reach one of those imbalance points and we start to see buyers come in. So big picture, sideways to down until we get back above here or until we get into one of the major levels to the downside. Major levels to the downside, you guys can see we hit a buy trigger here. We got a little bit of a bounce, but we're threatening with that right now. And if for some reason we find ourselves opening up a lot further down, would be my next area. Like the ES futures, these are a little bit different, right? So we had the imbalance that came around November the 4th right there. ES futures is kind of sitting in that, but they could go lower. And this is not even there yet. So what I would like to see is the Nasdaq lead to the downside. And once we get here, not only am I going to be bullish in the futures, but I'm going to be bullish in adding into some of my shares that have to do with tech. Okay. So those are my notes there on the NASDAQ. Next one, 4 hour, same thing, close underneath the zone. I created a new zone. It's really wide. It's pretty much in line with the zones I was just showing you. You guys know how to trade them. Supply up here, demand down here. And then our next chart that we're going to be looking at is going to be Bitcoin. So let's go ahead and take a look there. Bitcoin's down about 600 points. I'm not going to change anything here. What I think you should do is concentrate on the monthly. We came up and hit that target last month. We pulled back. We're underneath the 23.6. Therefore, this is not extremely bullish anymore, but it's still a bullish trend. Um, up and over 95,725, things look better. But just like I was showing you on the Nasdaq, as long as we stay underneath this blue line, the overall sentiment is sideways to down. Yes, you could still trade to the upside, but you have to, for me, I have to scale out at these levels you're seeing on here because I would personally like to see prices further down towards this 9 EMA, which would put us around 76,000. Okay. Bullish as long as we stay above 90, or sorry, actually bullish as long as we stay above 87. But I'm a buyer down here in the green zone. All right. That's all I have for this broad market analysis. My overall sentiment is neutral. I went over those reasons. I can't wait to see you guys in the morning. If I sound funny, I'm still not feeling the greatest. I took up my steroids that I need to take. They sort of help, but I think I need to go see a doctor still. And I can't hear out of my ear. This is like a common thing when I fly, so I probably sound really funny. And anyways, it's not gonna affect the way that I trade or anything like that. But I'll see you guys in the morning. I really appreciate you. Thank you for being super patient with me, and I can't wait to trade with you guys in the morning.